We pray for better days.
Welcome back. I made a quick video yesterday all about how to read a price action chart. This is a video talking specifically about candlesticks because on watching it back I realized there was a few extra things that I'd like to say just to make it a little clearer and which might be helpful for you when you're using these denominations on your price action chart. These are my favorite type of charting, or candlesticks, because they give you so much information, and each one that you look at tells you so much about the intraday trading that was going on at that precise time. So let's pick a candlestick and we'll just talk you through them once more. So each one of these candlesticks are these things, each one of these represents 1 day's worth of trading because we're on the daily chart. Now if I change this to 4 hours, each one of these represents 4 hours worth of trading, so on and so forth. I can change these to my heart's content. There's a million different time frames on here. So anyway, let's pick one candle and we'll just have a little look at it. So you may notice on the candle there's two parts to it. There's this little bit called the column or the body here, and then there's this other part called the wick, which is this little line. So they both mean different things. We'll come to it in just a few seconds. So you have to remember there's 4 parts to each candlestick. There's the open, the high, the low, and the close. The opening price on a green candlestick is represented by the lower portion of the body. So it's this little line here. So that'll be the opening price on trading for this particular day, 24th of September 2020, was 3226, and the closing price, so when all trading was closed at the end of the day, the price wound up to be 3246. So these are the two most important parts. These wicks showed how much the price varied during that 1 day. All right, now obviously if that was to be 4 hours, a 4 hours time frame, that would be during 4 hours. The variation during 4 hours. If it was 15 minutes, then it would be the variation during 15 minutes. Okay, but for this chart, it's a day. So during the day, bulls, they drove the price right up to about here, 3280. Okay, and then at some point, this price was also driven down to 3211. All right, so this was the variation during the day. But these are the most important 2 bits because this is where trading began, this is where trading finished. This was just a variation between those 2 times. Alright, so that's a green candlestick. On a green candlestick, the open is below the close because price went up during the day. On a red candlestick, the open is above the close because price went down during that day. And you can see these red candlesticks, they have little wicks on them as well. This is an interesting candlestick because look, there was so much upward pressure, it drove the price right back up to here, even though there was quite a lot of volatility during the day. So this is called a dragonfly candlestick, which is quite interesting. There's millions of different types. We'll not get into those. It's a little bit beyond the scope of the video. One thing I wanted to talk about is just how they interact with lines of support and resistance. So let's have a little look here. I've drawn on this line of resistance. You can see here the opens on both these days just interact so nicely with this little line of resistance. Yeah, it's slightly off, but they bounce so cleanly off it. And you can see here there's something similar going on over here, aside from when there's been a bit of a breakout here, which we'll come to in 2 seconds. So quite often the wicks of these candles bust through these support and resistance lines, which is why you never want to set your stop loss too close to these lines, because intraday trading may cause your stop loss to trigger and you'll lose your trade. So be very, very careful. Set them quite a bit away from your lines of support and resistance if you are going to use those during trading, which I do recommend that you do. I only really get excited if there's a breakout on if I know that the close has been above this line. Rule of thumb is 3% above this line, 3% of the total. Okay, otherwise you can't be sure that a breakout's on, and you also want to make sure your volume's good, which would normally be displayed down here. 3% is just a rule of thumb. It's not a guarantee. Of course, it doesn't always mean that there's a breakout on or your line of resistance has been broken going forwards. But like I say, it's just a nice little way of measuring it. And like I say, don't get too excited if you see these little wicks pumping through the lines of support and resistance, because it doesn't necessarily mean anything's happening. It's just intraday trading, which is way less significant. You can see here on the close that this one is broken through. Not by much, but after that the price has started to break out, so you want to get your longs in a little around about here, and then you'll be able to make some money. So that was pretty much all I wanted to say about candlesticks. I've been a lot more comprehensive in this video. If there's anything else you want to know about, just feel free to let me know anytime. And thank you very much for watching, and good luck and good trading.